Yeah.
So we usually say to you, hey, kind of on a horizon, what are you seeing? What have you been told? Where are you thinking rates are going to go?
Sure. Gosh, that's a fun question. It's a loaded question too, because we're in uncharted territory in the sense that interest rates historically have come down. We're in a low interest rate environment and it's been trending down since the 80s. But interest rates for mortgages and properties are tied to treasuries. Treasuries are tied to inflation. Inflation right now is as high as it's been in over 20 years, yet interest rates and treasuries have detached because the narrative coming from the Fed is, hey, they use the word, they're going to stop using it today. I know the Fed's having a big announcement today. They're getting away from this word, transitory, saying, hey, all of you are freaking out about inflation. To us, it's not real, so we're going to look past it. And they have convinced everyone buying bonds, including themselves, that bonds can be sold at a discount because this inflation that's happening isn't real. That's not true anymore. And so what we might see, what we're keeping an eye on too, is as these bottlenecks continue and there's an upward pressure on prices, which should also mean inflation, do rates catch up to that? And interest rates, honestly, there's upward pressure. The Fed's going to wind down their bond buying program where they're artificially buying rates down. So the market's going to have to catch up to what their appetite is, what it really is. But interest rates are headed up. I mean, you can still get the high threes on a 30-year fixed fourplex investment. I see that moving into the fours next year. You could see it just run off for a little bit, where it spikes another % or two for a couple months, and then the market realizes that it can't stay competitive or keep up with those rates across the board and not just mortgages, and they come back. But that's a long answer to your question just because there's so much going on right now. And some of it you can gauge off of historical data, and some of it you can't. It's just newer, and you're saying, this is so detached from what normally happens, what's going to happen here? But the overall trend is up, but for the long term, I don't think it's up substantially. So I still think that the 2 to 4 unit Fannie Mae Freddie Mac loan product is going to continue to be a great investor go-to for a long time.
Okay, good to know.
Yeah, the economy is highly addicted to those low rates.
Yes.
That whenever they start hiking that and they taper, they call it the taper tantrum.
Yes. 2013 was a real big last one that caught everybody off guard.
Yeah, so it may just be kind of the new normal, and you got to wonder, could they even come down at some point? You hear about negative rates in some of these Western European countries,
right?
Yeah. What if you got paid to borrow?
I'd sign up.
Yeah.
Who wouldn't?
Yeah.
That'd be awesome.